Coming up in today's show.
Gold just went basically parabolic from 3,400 to over 3,600 in just a matter of days. We're seeing tremendous amount of central bank buying. The gold reserves actually topped the Treasury reserves for the first time in 30 years. Maybe the Fed is not going to be the final word on monetary policy. We have a debt that is not going away. And so that's what gold is. I call it the mirror of the cracks. Even with the market continually making new highs, you always have to have the timing as a trader. But right now, even if you ignored the market and just focused on gold, you can say that at some point, something might come home to roost. It hasn't happened yet. Both of these are going up together, market and gold. And at what point does that depart? That's why I'm watching silver.
Well, it's been a record-breaking week. As gold surpassed 3,600 for the first time, silver is over $40 an ounce. On this Thursday, they're pulling back a bit, but many people feel there's more to come. Joining us on the program is Mish Snyder. She's chief strategist and market gauge. And Mish, let's take it from the top with the major indexes, which have been in record territory.
Well, yeah, there has been a rotation to a degree into small caps, which for me is exciting because that's the grandfather of the U.S. economy, how I've anointed the Russell 2000, in that those 2000 stocks are small cap stocks and they all have presences in the U.S. as their main factory, industrial geography, or what have you. So what that really means is that regardless of whatever you want to believe politically, there is somewhat of an impact, positive impact of what's happening with the reshoring and all of these deals that are being made to bring industry back to the U.S. So that's a good thing. And then the other interesting thing, of course, was that NASDAQ was starting to lag, but the news on Google, Alphabet, and the whole antitrust being basically tossed out the window, which gave Google a boost, but also really basically gave a lot of Apple and then the whole growth area a boost, was positive. And even though NVIDIA sold off after earnings, it's still looking pretty good. So you've got still relative weakness in the Qs and in the semiconductors, but that's okay. Relative weakness is very different than they're falling apart and growth is going to collapse and now the market's going to sell off. And I think that's why we're here right now. What's interesting to me mostly about the SPY is we seem to be sort of stuck in the same area now for the last couple of weeks. But that's why I'm really interested in what's happening with the small caps, because they're starting to outperform the SPY, as is the retail sector. Interestingly enough, transportation, although relatively weak, biotechnology, and even some of the financial areas like the regional banks have all started to outperform the SPY. So what we can say is the market looks strong overall, but the leadership in the rotation is here. Whether it sustains, that's another story.
At Financial Sense Wealth Management, we're committed to helping you build, maintain, and preserve your wealth. Contact us today to find out about our comprehensive financial planning and asset management services. Whether you're planning for retirement, taxes, putting together an estate plan, or need assistance in managing a 401k, Financial Sense Wealth Management is here to help. Give us a call to speak with one of our certified financial planners or wealth advisors at 888-486-3939 or go to financialsense.com and hit where it says contact us.
Advisory services offered through Financial Sense Advisors, Inc., a registered investment advisor. Securities offered through Financial Sense Securities, Inc., member FINRA SIPC. Both companies doing business as Financial Sense Wealth Management.
I want to move on to interest rates because it's widely anticipated the Fed could be lowering interest rates this month. It was a year ago when they first began to lower rates with a 50 basis point cut. Let's talk about interest rates because you've got a falling 2-year note. Looks like the 10-year is behaving. What's your take on interest rates?
Well, I believe that at some point, that they will fall. And people are looking at every single statistic so carefully. Jobless claims tomorrow, there'll be the jobs report. And I actually think that it's not really all that relevant in terms of any specific number because we know that everything gets revised anyway. It's more what the atmosphere is and what Powell said during Jackson Hole. And he was pretty clear that they don't believe that inflation is going to get much below 3%. They're kind of okay with that, and more concerned about the slowdown in the labor market. And we had the JOLT report showed that there's actually more unemployed people than jobs available for them. So that can be an issue. That all points to some kind of an interest rate cut, probably a quarter to be conservative. Maybe he'll go a half. I don't know. The bigger thing to me is that we're still not really seeing it in the long end with the 30 years. They're still sort of hovering in this range. And what we really want to see if we're looking at the long bonds through the TLT is we still want to, I think the most positive impact to the market in terms of real estate, and that would be more of the 10-year, but even on the longer end, consumers and all of that looking for lower interest rates, we would have to see those TLTs really get over this massive consolidation we've had for months. We had to put a number on it. I'd say 90 would be a good round number to watch for a break. And then we've got, a new situation. What that does for inflation, and do we go from stagflation to more hyperinflation? I know you and I talked about this the last time. I'm not seeing it in certain areas, but I'm seeing the potential in others, and that makes it difficult to call because, again, nuanced is probably one of my favorite words of 2025.
And we got a lot of it too, almost every day. Let's move on to one of our favorite topics, which is commodities. But before we do, I briefly want to talk about transportation because for us, we're looking at railroads right now. Let's talk transportation.
Well, yeah, let's start with the overall because I have that economic modern family that I created, and transportation is obviously one of the characters and a very important character because you can measure the economy not just by how strong consumers are, but obviously how much goods are moving, both domestically and abroad. And if you're looking at the overall transportation index right now through IYT, you can see that it's really holding key support. It looked like it was going to fail miserably, but now it's starting to hold up. And I think that really is part and parcel of what we just talked about in the beginning, which is if we get industrial manufacturing optimism, and the market always runs a little bit ahead of the reality, and the consumers are still in the game, which they are, this is going to translate into freight, air, ships, all the things that are impacted in the transportation. So right now, I would have to say it could be even a little undervalued compared to what the small caps are doing. And if we look at what would be your favorite rail to look at, Jim?
CSX.
CSX. Let's take. I like to put up charts because then I can speak more intelligently looking at price. So yeah, so that fell huge over the last week, and now we're trying to hold here back over a very key moving average, so let's call it 32. I think if we can get back over 33, maybe the worst is over. Certainly the momentum is more in a bullish divergence, which means the momentum is coming in to show that if the price goes up here and confirms, maybe we'll start to see some kind of a rally there. I don't know if I would jump in yet, but I would certainly keep my eye on that. And if we look at another one, let's come up with another one.
Union Pacific.
UNP, right?
Yep.
Okay. That's the same thing. These things have been hanging out and consolidating around, basically the 2025 lows. And again, 220 has been sort of now, maybe we can call that support, but it doesn't get interesting until it gets 230. So even though IYT looks a little bit better, because I think part of IYT, by the way, is taxi services, Uber. That has been a big factor. I think if you're looking at UNP and the other one, 230, now all of a sudden we got something. So I don't know if I'd necessarily be jumping in right now, but I would certainly keeping my eyes on that. And that would, again, would be a positive sign for the economy in the U.S.
Yeah, we're looking at this from just the fact that I think it's been what, $15 trillion of investments that have been announced that are coming here. Now, some of that may not happen and it may take time, but as the U.S. reindustrializes and we start building more factories, what was it this week? South Korea is announcing they're going to build a shipyard here. You're going to have to move stuff.
Exactly.
And the most
Exactly.
efficient way to move it is on rail.
Right. And, you and I last time we talked about how undervalued energy was, not just the ETF for energy XLE, but, obviously uranium and coal and all the things that we needed to fuel the economy. And transportation is certainly a big part of that. You cannot move stuff. As far as I know, drones are not going to carry that many things. We still really count on our freight system. So we just showed two stocks that are undervalued, but I wouldn't necessarily jump in yet. I'd like to see a little bit more proof that they can hold here.
Financial Sense Wealth Management has been named as one of the top investment advisory firms in the U.S. by the Financial Times. Let us put our financial expertise to work for you. Contact Financial Sense Wealth Management today at 888-486-3939 or email us at grow@financialsense.com. Advisory services offered through Financial Sense Advisors, Inc., a registered investment advisor. Securities offered through Financial Sense Securities, Inc., member FINRA SIPC. Both companies doing business as Financial Sense Wealth Management.
Well, let's move on to another favorite topic of ours, which is commodities. I want to talk about, let's begin with silver, because it's probably one of the precious metals that have never surpassed its old high going back to 1980. That was kind of artificially created with the Hunt brothers trying to corner the silver market. But, something that really strikes me, Mish, I wonder if you see things the way we do. We had the Hunt brothers 45 years ago trying to corner the resource market. Fast forward to today, and you have two of the world's largest economies, the U.S. and China, trying to corner the resource market.
Yeah, and by the way, just as a little personal aside, it was because of the Hunt brothers that I lost my job. I was working on the commodities exchange at the time for Conti Commodities, which was the futures division of Continental Grain. And after that they were holding all those trades for the Hunt brothers, and they went belly up, and I was told, sorry, but we can't afford to pay you anymore, which brought me over to COMEX. So the good news is I learned a lot about silver and gold after that. I was trading coffee, sugar, and cocoa at that time. But yeah, I mean, right now, U.S. government 2 weeks ago announced silver as a strategic mineral. That's huge. We know that it's a big conduit for EVs and for solar. And so it is an industrial metal, which is important, obviously, again, if we're talking about some kind of growth here in the whole overall economy, number one. And number two, as a measure of inflation, we look at the silver to gold ratio, and that's still not showing what I think could be the potential for silver to go much higher. However, that break over $40 was a significant break. We're getting a little correction as we're speaking, but not very much. I mean, unless we really break down under 40, I would think right now we have the potential, slowly maybe, but to get back up to 50 and maybe beyond that.
You look at some of these miners. I mean, the market was focused on NVIDIA's earnings. And you take a look at some of these miners that are reporting profits that are up 100%. One of the companies that we own, we have, instead of the Mag 7, we have what I call my shiny 7. It's my gold and silver stocks. And some of these companies, one of these companies has a $2,000 per ounce profit margin on gold. I mean, you can imagine where we're at right now at 3,600, what that means.
Absolutely. And I'm, looking at something like Newmont Mines. I mean, we're having a little bit of a minor mean reversion to the sell side, which means some profit taking is coming in, and that's okay. The same thing's happening in silver and gold today. But if we just look at the gold, I mean, I've been bullish like you in gold for so long. I can't even remember when I wasn't because I think I started in 2019 talking about gold, and it was like at about I don't know, it was really cheap back then. And then more recently, when it crossed over 2100, I was on Kiko. We were talking about this before, saying just, close your eyes, hold your nose, and buy gold. So here we are now over 3600. And what's so fascinating to me is how many bears have emerged throughout this whole move up. So I always say when you start to see buyers on strength as opposed to sellers on strength, that's when you could see a parabolic move. So even though I'm watching silver carefully, it's not at that point in the ratio that's making me think that that could go parabolic right here. But gold, it just went basically parabolic from 3,400 to over 3,600 in just a matter of days. We're getting a little bit of a pause. So yeah, gold's not done. I mean, we're seeing tremendous amount of central bank buying. The gold reserves actually topped the Treasury reserves for the first time in 30 years. There's still, obviously, we talked about interest rates, right? So the big concern there is the autonomy of the Fed. As we're starting to see interviews for new Fed members, the Lisa Cook thing, we don't know what's going to happen with that, but still it just suggests that maybe the Fed is not going to be the final word on monetary policy, and that could be interesting. We have a debt that is not going away. And so that's what gold is. I call it the mirror of the cracks. Even with the market continually making new highs, you always have to have the timing as a trader. But right now, even if you ignored the market and just focused on gold, you can say that at some point, something might come home to roost. But it hasn't happened yet. Both of these are going up together, market and gold. And at what point does that depart? That's why I'm watching silver, because I think that's where you see the departure is if silver to gold ratio breaks down under 80.
Wow. And finally, let's talk about natural gas because, I look at everybody's talking about AI centers, these big, huge data centers that require an enormous amount of energy. And there's a movement politically that a lot of the politicians, governors of states are saying, hey, if you're going to bring that data center here, we don't want you sucking energy from the grid, which affects consumers. So you're going to have to start providing your own source of electricity. And Mish, the only thing that's going to be working right now is going to be natural gas.
Yeah, and I'm actually, somebody posted a chart this morning that I thought was really interesting. It shows the power demand growth, how rapidly it's escalating. And it's saying the electrification of heating and transport, data centers, and AI-driven future will create unprecedented growth in power demand. And it's showing by 2040, we're just at a tremendous, like basically almost a 50% higher just in the next 15 years. They're saying since 2010, it's already grown, but from 2025 to 2040, we're going to see a 31% increase by the emergence of large load data centers and EV growth. So if that's the case, yeah, we know that nuclear they're working on it in Silicon Valley and it's the future. But right now what they're saying is they would need 175 nuclear reactors versus the 94 that we currently have installed, 6.6 million acres of solar farms, equivalent to the size of Hawaii, and also over 160,000 wind turbines. But, politically right now, we're having pushback on wind with Trump, although I just saw another lawsuit come out that they're suing because of his trying to shut down these wind turbines. Solar is hanging in there really, really well. But what else do we need? And natural gas at $3 looks pretty darn cheap. Right now, we're seeing it trade at 310, let's say. If we're looking at the October contract, it looked like it bottomed at the end of August. And this thing, I don't see any reason why we can't see a move up to around 370, 380. And that would be, and then we'll see what happens from there. But for now, that's kind of what we're looking at.
One of the problems with natural gas is, once again, the weather. You just don't know what kind of weather you're going to have. Is it going to be a cool winter, a warm summer? And, it makes it a little bit more difficult to predict.
Right. And hurricane season, is just beginning now. That could be a factor as well. Geopolitics can be a factor in this
Yep.
as well. So, there's and by the way, geopolitics is another one of those things that gold is reflecting. Obviously, with Russia, I mean, it's probably one of the cheaper commodities right now that is relevant. The reason why I haven't been screaming inflation is because my little barometer of sugar is actually falling, not rising. Wheat, corn, soybeans, I mean, they bounced a little bit off the lows, but they're not at any kind of point where we can say, oh my God, actually the crops have done very, very well for the most part. So, I think that we have a nuance, there's that word, inflation, and that's why I continue to watch now natural gas even more than oil, because oil's another political football. Are the OPEC plus, are they going to hold pat? Is there a surplus? Is there not? I mean, we certainly have talked about this. The numbers are showing that the rigs have gone down and the whole Permian Basin production has come to a screeching halt, but we're not seeing that reflected in the price because of Saudi Arabia. I would think you'd have to watch silver, gold. You'd have to watch this natural gas. Obviously, keep your eyes on oil. I wouldn't take it off. And if we start to see that and the dollar, which, even in its big earnest attempts to bounce, hasn't really gone too far, and we start to see the yields drop, we can go from inflation to a more serious inflation, but we're not there yet.
And finally, I want to talk about utilities. They were kind of widows and orphan stock, but recently with all this AI and data centers and the demand for energy, mainly our electricity coming from these centers, some of these utility stocks are looking like growth stocks again.
Exactly. Although we have seen a correction from the highs, and this is just the cycle of the market. That's why I always try to tell people, if you don't have some level of a comprehension on timing your way in, your risk points and your profit targets, then, if you're just a passive investor and you don't care and you don't mind sitting through major downturns, that's one thing, but that's not us. We're active investors. So looking at, the utilities right now, we're coming into support again, which could be an interesting entry, but it has come off, which doesn't really make that much sense. They're somewhat interest rate sensitive. But, like we were in GEV, I think we still are in GEV, by the way. And that also has come off. So, everything cycles through. The buzz sometimes it's sort of like the buy the rumor, sell the news kind of thing. So I'm not poo-pooing this. I'm just saying that no matter what we're talking about, you should always understand your timing of getting into something if you're not just a passive investor. And looking at something like GEV right now, it's under 600. It would need to get back over 600, let's say, to prove to me that it's got another leg up. If you're looking just at utilities at the XLU, it really has to hold it around 83 and get back through 85. So, I like to put numbers on things because that's what I do. I'm a trader, not just talk about fundamentals.
So if you had new money to put to work right now, where would you be putting it?
I would buy Boyle. If you're not a commodities trader, I would buy Boyle. That is a good way to have exposure to natural gas. I would buy probably maybe some solar. First Solar is trying to hover around 200. 190 seems to me a big rock bottom. Jinko Solar, which is a Chinese company, looks pretty good, like it might explode from here. Moving around the board, I might look at some of the biotech stuff. I've been big on the diet drugs and the impact the diet drug is having on certain companies. So like I'd be looking, let's say, at Hims is a big one, very hot stock, looks like it may have bottomed. And interestingly enough, today I've been watching IBM. And so, in quantum, of course, that's been hot, but IBM came all the way down. And now IBM is making a nice move today. So I'd be looking at stuff like that. I like to look at things that have already based, as opposed to that things are already in motion with strong momentum, because those are the ones that's going to get hit the most. if we get any kind of downturn, like all the hot stocks. And there's so much right now that looks like it's basing out. So that's kind of where my eyes are going right at this moment.
All right. Do you see anything that would give you pause or caution with the market right now?
If the semiconductors, which and the whole growth space cannot hold up here, and they're all under their 50-day moving average right now, which means they're in caution phases. If they start to accelerate to the sell side, I think that would be a concern, probably the most immediate concern right now for the overall equities market. Again, second concern would be all of a sudden if we start to see silver go more parabolic, dollar fall, rates drop, that could be more of a hyperinflationary situation that would impact the market. Other than that, I mean, everybody's been watching for some kind of bond crisis globally because of the high debt. But it just seems like printing more money seems to be doing okay. I know that sounds odd, but it does seem like that's, helping, at least helping the Band-Aids stay on. So yeah, that's what I would look for. If the cracks get bigger and we cannot see a recovery in the market.
And then finally, what is it about Mish? September tends to be a turbulent month for stocks. It's, some of the biggest corrections of the year you usually see around this time of the year. Do you see that playing out this time?
Not right now. And, it's interesting because I've been getting asked that question a lot about the seasonality of September. And the best answer I can come up with is when something ignores the typical seasonality. Hey, let's talk about gold. Everybody said August is the worst month for gold. Well, it wasn't so bad, right? And actually turned out to be the opposite. I'll say the same thing for the market. At this point, the seasonality is not playing out, which means it could be even more bullish. I'm not saying I'm a strong bull, but I'm certainly not really nervous at this point about any kind of major seasonality correction happening like what we've seen in Septembers in the past. And, I guess the easiest way to say it is, long till you're wrong, and just be just understand trade management.
All right. Well, listen, Mish, as we close, tell our listeners how they can find out more about the work that you do.
Well, we have a website, marketgauge.com, and we post a lot of content there, including my daily. At Market Minute is my Twitter handle. And, if anybody wanted to actually physically trade with me, I am now part of Slice, and that's app.io/Mish would be how you find me. I'm actually putting up real trades in there. So it's a very inexpensive way to be exposed to how I'm trading. And there will be a link to everything, the website, my Twitter handle or X handle, and Slice on Jim's website after the interview is put up.
Well, listen, Mish, it was good having you back on the program. It'll be interesting to see when we talk again where these markets lie, especially gold and silver.
Exactly. Okay. Well, thank you so much for having me on. I really appreciate it.
The Financial Sense News Hour is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the News Hour each involve their own unique risk factors, which are not discussed on the show. Responses to listener inquiries are based on the personal opinions of the Financial Sense staff and do not take into account listener suitability, objectives, or risk tolerance. Financial Sense News Hour and its parent company shall not be liable for any financial losses that result from investing in any companies mentioned in Financial Sense or arising out of the use of any material on the News Hour. Be advised that you invest at your own risk.